All right, good morning, Trade Pros. We are live from our head office here in Toronto, Ontario, on this gloomy day of July the 2nd, 2019. So welcome one, welcome all to today's update. And let's go ahead and get started here, guys. We are seeing a little bit of a slowdown. It's been pretty quiet so far in this session. And not too much going on today as far as economic news, economic events scheduled. What we are seeing is, we've got a little bit of a reduced market hours over the next 2 days. We have, I believe tomorrow, we've got about a half day. Looks like futures, at least on the equity indices, are closing around 1:15 p.m. Eastern time. It's a bit of a half day, and looking at the same to a potentially longer close on the actual 4th of July for U.S. Independence Day. And so we just came off of a vacation here on Monday. We were celebrating Canada Day down here, or I guess up here in Canada, north of the border from you guys. And yes, we do have our own celebration day in July. That is Canada Day. So for you guys on the 4th, we're going to be having a quieter session, and we are kind of seeing a reduction in volatility and volume on the back of traders and investors essentially preparing for that bit of a holiday. We also do have labor data coming out of the States on Friday. We have NFP and some of the supplementary labor data as well. So expecting a bit more volatility into Friday. However, between now and then, not seeing or not anticipating too much volume in these markets here until that day happens. So with that being said, not too much, as mentioned, as far as the economic events for today's session. Just kind of looking through my summary here. Not seeing too much. Stock volumes drying up, as can be expected in front of a 1.5 day holiday for the U.S. markets. Some of the overnight news came in. We had the RBA cut its cash target rate by 25 basis points to 1%. That's pretty much it. USTR proposes increased tariffs on EU products due to EU aircraft subsidies. Proposes adding more tariffs to 4 billion of EU goods, increases total amount to 25 billion. So that was a pretty important driver overnight. Now that the market kind of gapped up over the weekend on the optimism or the increased hopes and optimism around the US-China, meeting at the G20 over the weekend. President Xi and President Trump met up on Saturday afternoon, or I believe it was Saturday in Osaka, and we got a squawk coming out that Trump agreed essentially to not slap on any additional tariffs on those 325 billion worth of goods he could have, and he also kind of softened his stance on Huawei, essentially kind of stepping back from his original request to not have any U.S. companies selling any parts to Huawei, but then he kind of softened his tone and mentioned, any companies that are selling products to Huawei that cannot be part or cannot affect our national security risk will be allowed to be sold to Huawei. So we saw semiconductors get a bit of a bit on the back of that front, and now that the U.S.-China trade dispute has kind of found some optimism. It's interesting to see that Trump has now, fixed his sight on the EU and is considering a potential, trade dispute with the European Union. So this kind of goes back to the EU aircraft subsidies that were getting received by Boeing, and I can't remember what the second one was off the top of my head. Let's see. I can't get it up here at the moment. Sorry, it was Airbus and Boeing. That's what it was. So Airbus and Boeing were receiving subsidies from the EU, to which Trump mentioned, that was unfair. It was an unfair practice. And, Trump is looking to add some more tariffs, as mentioned, to 4 billion of EU goods, which increases the total amount to $25 billion worth of goods that can potentially have increased tariffs on them if the US and the EU do not, come to terms with this dispute. So that's really kind of been weighing on the equity markets today. I can see we pressed into those overnight highs, but we're kind of back within the range. And that's kind of what you would be expecting of these kinds of days. I'll switch over to my charts shortly. But what you will see is that there has been a pretty big reduction in volume in the SPOOs. So let's go ahead and do that now, since that is basically everything we had. Some of the news that we had in the U.S. session. We had the May ISM New York number come in at 50 versus 48.6 prior. Our business outlook came in at 51 versus 56.3. And this is the month over month figure. This one also came in at a 10-year low. So that's also important to note. May ISM numbers came in, or rather the business outlook came in at a 10-year low. So businesses are not looking, they're not seeing this. The economy is doing as well as what we saw month over month. Also out of the States, we had White House trade advisor Navarro mentioning that the U.S. continues to head in a positive direction on China trade talks. U.S. is currently talking to China on the phone. And that's basically all that we have as far as economic releases. I can see that we do have... Nope, not anymore. So we did have an FOMC member speak. As far as the remainder of the session, nothing really on the docket that's of high impact news until Wednesday, midday for the states, where we see the ADP non-farm employment change. And these aren't the non-farm payroll numbers. This is the ADP non-farm employment change. So a bit of a precursor to them. And we also have the ISM non-manufacturing at 10 a.m. tomorrow. So outside of that, let's switch over to our charts. Bit of a longer wrap today. But here are the charts, guys. And so what we are seeing is that crude oil, obviously down a little bit. Crude oil, around 660,000 contracts, which is above average. On average, we've been seeing 550 to 600. 660 shows us we've got above average. Daily change percentage is also down 3.16%. That takes into account your previous day close, which was up in the 59.15. So previous day close, 59.15. Current last traded price is here at the 57.23, and that's why we're down 3.5%. So obviously downside was the right side to start the morning. We kind of kept the team on the downside throughout the morning part of the session, and now we are seeing a bit of a recovery. However, the bulls have to get this market back over the 57.30 to start showing any sort of nice bids going in. At the moment, we are just consolidating after a nice down day. So consolidation back to the top end of the range isn't out of the norm. SPOOs, this is what I was mentioning with regards to low volatility, low liquidity. 618,000 contracts, guys, at 12:13 p.m. Last week and the week prior, on average, at around this time, we were seeing anywhere between 1 to 1.4 million contracts. And right now, what you're seeing is 618,000 contracts, which is super light with regards to the average that we've been seeing. And just looking at the chart up here, it's an ugly chart because it's been super choppy. We had one move to the upside, which was faded back to the downside. And guess where we're in? Right back in the middle of the range. So, this is kind of what you can expect leading into the holidays. And, I wouldn't be looking for too much directional movement. Leading into Friday, after Friday, we'll have the NFP report, and that'll give us some better data. However, for the time being, I kind of see us sitting around this level of chop. We did kind of close out that Sunday gap yesterday, around 250. You can see around here, 250. Closed that gap, bounced up a bit. So, our overall longer-term consolidation kind of hangs between these all-time highs here in those 29.80s and these lows, previous day lows around the 29.55. So, we're in a structure at the moment between the two, but I don't really see that upside or this downside breaking until Friday, and I'm just kind of watching for what it does within that range. Not too many exciting opportunities at this point. You could just look to fade the upside of the range by the bottom end of the range, and that's pretty much it. excuse me, at the moment. So that's what we got on there. Let's check the pivot charts. You know, crude oil obviously being down 3% on the session. You would imagine we'd be below the pivot, and that's what we've got. We are below the pivot. We have closed Sunday's gap, which was around S1, around your $58 mark. Traded back below S2, didn't quite reach S3, but now we're rotated back up into that zone, and this is where we should start seeing some resistance. If I scroll over to SPOOs now, you will also see kind of the same. You know, we had the gap up over on Sunday. This on the back of that China-U.S. Trade, not agreement, but they agreed to. Essentially, I call it they agreed to disagree, and so this gave them a little boost in the markets. However, you know, there's sources coming out of both ends, more so the Chinese end, saying that this deal is not really going to go through. This is more so just a little bit of optimism for the markets. And, you know, whether that's the case or not, doesn't matter. All that matters is how the markets react to that. And what we saw was a gap up. That gap has since been closed, as you can see here. And we've pressed up off of that zone. And as mentioned, you know, kind of just watching this level of consolidation at the moment. All considering we are coming in from a bullish trend. You guys can see if I scroll way back, you know, bull, consolidate, a little bit of rotation, consolidate, breakout. Now we're kind of just hanging out within the context of that zone. So just a bit of a consolidation zone at the moment. We'll see what happens here. If we get back down, we are below the pivot at the moment. So if we get back down, hold this level, get back down into those 55s. That's ultimately where I'd be looking for support. That's what I'd be looking for the sellers to target today. If we can't get back above that pivot, is your S1. Back above the pivot, you know, you still have your overnight highs here in those 72s. Back above that, you know, we'll make a run towards those 2980s. So that's kind of the way we're going to be looking to play this. Crude oil, you know, this is the open on the session so far to date. Right over here. Bit of a rally up into the VWAP, failed that VWAP. Once we came back, broke that level. You know, crude trends very well. So if it's kind of textbook. You get the break of structure, rotation back up, continuation. And we've been seeing that time and time again. You know, getting the consolidation breakdown, rotates back up to structure, breaks out, rotates back up, comes back down. We did see a temporary bottom come in here around these 56, 60s. We had these previous lows. We were forming lower lows, lower highs, came down into the zone, you know, broke below, but then rotated back up within that range. Now we're kind of trading the top of that range, 57.10s here. So we are potentially transitioning now. If we do get a rotation lower that kind of fails to break below these lows, we might be getting our higher low for the move to the upside. So the level that really needs to break for that buy stop run to happen is these 57.30s. As you can see, we had some consolidation here before the breakdown. We had that rotation back up into that level before that move down. So you can obviously see there was selling intention way up here, and the selling demand or the selling supply was obviously supply was greater than demand because prices pressed down as they did here. So now as we come back up into that zone, it'll be interesting to see whether the sellers step back in and drive this guy lower, or whether we just get a clean breakout. The latter situation do not see being as likely. I do see us kind of coming into here, forming some support or resistance and getting a bit of a pullback from this zone. Whether that pullback comes all the way down into these lows or whether it holds, that we do not know. But if you're looking to get short up here, that's kind of the level where you'd be looking to get paid, as a failure to get back below here can start a potential buy stop release above that zone. So ultimately 57.30s are the level of resistance. That's our line in the sand for the sellers. They got to hold that. If it breaks back up above, your next target is these 57.70s, and then coming up into your 58s where the VWAP is sat. So that's what we got for you guys on crude. On the SPOOs, you know, kind of walk the team through this morning, and you know, kind of happy to see it played out again, time and time again. What we've been seeing is these markets, especially the equity futures, what they love to do during summertime is, you know, fake breakouts of the overnight high or the overnight low. So we mentioned to the team as the SPOOs were making this run up that, first time around rotations or breakout attempts of key session levels like that don't tend to actually follow through. They often tend to fail. And that's exactly what we saw here. We came right into the overnight high, little breakout, and then the next rotation failed to hold that support and press higher. And on that final rotation here, you had a little wick to the upside. That was your kiss on the cheek of the overnight high before we rolled back down over. And that was really a great fade. I didn't catch it up there. I caught the initial one up here for the morning session, off that rotation down, came back up, shorted it up there for a quick move down, got paid there. And the next zone was right up there. And we mentioned, if it comes up to the overnight high, look for it to hold, rotate back down to the lower end of the range. And we can see it didn't quite get back down to the overnight lows, but it came right back to the opening range low. Nice little wick. And we have since pressed up, and we're starting to form some structure above that level, showing that we're kind of holding the 64s, but we have the 5-day point of control, some volume profile hanging around here. And so this could be a pretty nice level of resistance. You can see we had 2 rotations out of that level before we broke above it. Now we're coming back up. We'll see if the sellers can hold this. If they can, what you can expect is another rotation back down into the lower end here. Take out these guys and trade into those overnight lows. So that's ultimately what we're watching for. So long as this market remains below the overnight high, I've kind of got the feeling that sellers remain in control. And as long as they can hold that level, we'll look to press this sucker back down into those overnight lows. So that's basically what we got for you guys today. Nice quick walk through. And let's finish this sucker off by giving you guys a quick peek at the TradePro Performance Index. And let me just clean some stuff up here. All right, there we are. So throwing that guy up there, that is our TradePro Performance Index. So for the newer viewers, this is simply how our traders do on a daily basis. We throw the poll up and we see what the traders come back with. And ideally, we get more positive than negative, but sometimes, we are trading and things can go wrong, but we haven't really had any days where the majority of the room is down. I think the last one that we actually had where the majority of the room was below 50% was back in May 31st, 45%. Since then, we've come as low as 50%, never dipping below that. So that's showing you guys the room is doing well overall. And as we come into July, our average in June was 68% green. Great figures. And so far for July, I think we're around the same. Yeah, around today, 67.86% of our traders were green, which is a great sign simply because you're seeing the SPOOs were super, super choppy. And you are seeing that, crude was really the market that provided us with the opportunity in today's session. So despite a choppy crude market, we did have despite a choppy S&P 500 market, we did have some good volatility and direction in crude. And so our members did well on that front. So guys, that is basically our run through for today's session. Let me jump off of the charts here and back onto the camera. And so we're going to be signing off. As mentioned again, tomorrow we're going to have reduced market hours at 1:15 p.m. Eastern. That is the close. And then July 4th is going to be either a early close or the full close. I'll have to confirm that. Yeah, that's what it's looking like. So liquidity is drying up leading into that. Don't expect for too much. If you will be trading into the remainder of the session, you're not going to be wanting to, throw on trades and look for runners. You're going to want to take profits relatively quickly because we're not seeing very much follow through. Just going in and out of the ranges. So look to play the extremes of the ranges. Look to take profits quickly. Do not look to get in the middle of the range. Middle of the range is where you get absolutely ginsued. And so if you're going to identify range and if you're going to remain trading into these, identify the tops and the lows of your structure and look to trade within those. Do not really look for breakouts. because at this point in time, especially with this kind of liquidity, you're going to get annihilated trying breakouts. So that's going to be the sign off. 3 rules: remain disciplined, remain patient, and remain diligent. And I'll leave you guys with that until tomorrow. Signing off, guys. Take care. Have a good one. Ciao.